Opendoor stock demonstrated notable intraday strength today, advancing 6.43%, reaching an intraday high of $5.25 and a low of $6.47. Early trading saw strong upward momentum, although after-hours activity has experienced slight downward pressure, largely attributable to disappointing earnings from AMD. This underperformance may influence broader tech and AI-related equities in the coming session, potentially creating a ripple effect across those sectors. Despite the broader market context, Opendoor exhibited strong performance in the absence of company-specific news. There were no SEC filings or press releases today, and much of the media coverage consisted of articles speculating on option activity, many of which appear to have been AI-generated rather than reporting on verifiable data. The primary driver of Opendoor's advance appears to be its technical positioning, which will be detailed later in this analysis. Macroeconomic developments also provided some support. While today's scheduled JOLTS report was postponed due to the government shutdown, midday updates indicated that the House passed a funding package to end the partial shutdown. Although this development is unlikely to serve as a major market catalyst, it did coincide with a broadly positive trading environment, with many stocks moving higher. Looking at market sentiment specific to Opendoor, historical context is instructive. When the stock began its recent upward trajectory, around the $4 or $5 level, prominent short seller Martin publicly announced his short position. This prompted additional shorting activity from other market participants. Subsequently, Martin reduced his position, citing substantial upside potential, and confirmed today that he would not maintain a long-term short stance on Opendoor. This endorsement suggests confidence in the management's strategic direction, particularly under CEO Cass, whose track record of innovation and execution has been a consistent catalyst in other growth companies such as Palantir and Robinhood. Short interest remains meaningful but shows signs of moderation. Approximately 15.38% of the free float is currently shorted, representing 120.35 million shares. The average cost to borrow stands at 72, with a DTC of 1.46, indicating that shorts are relatively overextended. There are still indications of naked shorting, with shares shorted exceeding shares on loan, a condition observed consistently since November 28. Martin's recent statement may encourage further unwinding of short positions, potentially driving the percentage closer to single digits. Options activity further contextualizes market dynamics. Today, 3.4 million call options and 2.66 million put options were traded, with 51% of total options activity being bearish. These figures contrast with some media narratives suggesting overwhelming bullish interest, highlighting the discrepancy between technical-driven price action and reported speculation. From a technical perspective, Opendoor exhibited notable support and resistance levels. The intraday low of $4.79 tested and bounced off the S2 support level, establishing $4.80 as a key floor going forward. Subsequent support levels are $5.4 and $5.42, while after-hours trading at $5.10 remains above S1, reinforcing short-term stability. Bullish consensus anticipates a range of $5.56, while bearish expectations target sub $4.50 to $4.55. Market participants also engaged in significant secondary market transactions today. The largest trade, executed post-market, involved 10.1 million shares, with additional transactions of 2.07 million, 1.1 million, and 1.01 million shares. Dark pool activity peaked at 547, with multiple whole number transactions, typically indicative of hedge fund involvement. These flows suggest institutional interest is contributing to market stability. Comparatively, Opendoor is performing relatively well against broader growth stock indices, as many equities today approached or fell below their 200-day moving averages. The stochastic RSI indicates an oversold condition, suggesting potential for additional upward momentum. Should Opendoor release positive company-specific news, the stock may experience an accelerated advance. Overall market performance provides additional context. The NASDAQ declined 1.43% and the S&P 500 fell 0.84%, illustrating that Opendoor's gains occurred despite broader weakness. No new analyst ratings were reported, reinforcing that technical factors, institutional activity, and management confidence were primary drivers. Key considerations moving forward include support levels at 480 and 54, potential upside targets between 550 and 6th, and continued monitoring of short interest and institutional positioning. Notably, there is an increase in limit orders from institutional buyers compared to previous sessions, which may strengthen support levels. Opendoor demonstrated resilience and technical strength in today's session, supported by favorable management commentary, institutional interest, and oversold technical indicators. While caution is warranted given broader market volatility, current dynamics suggest the stock is positioned for further potential appreciation.